The morning report for 16th of September 2009. It seems Warren Buffett is buying equities in the US, and this is stirring the market on. Now, the Dow Jones is up 0.6% yesterday to close at 9,683 points. S&P 500 up 0.3%, and the Nasdaq up 0.5%. The FTSE followed suit. It was also up 0.5%, whereas our market took a bit of a breather yesterday, and it's closed up around about 9 points, closing at 4,540. Obviously, the big question is where to from here. Is it going to continue up to 4,800, or is it going to start pulling back? We'll wait and see. But today, we expect to see the market continue to move upwards. I expect to see an extra gain of 21 odd points today. We'll be back close to the 4,600 mark on the close. Now, the gold price also rallied last night, up 0.5% to close at $1,006 an ounce. This is getting very close to its all-time high of $1,030 an ounce, and certainly people are starting to concern about gold, and long positions are starting to be sold down, so you might see a pullback in the gold price in the short term. Oil price was up 3% yesterday, closing at $71 a barrel. Big move in oil, while the Aussie dollar stayed fairly much still, with closing around 86 US cents. Now, the big news yesterday obviously was Telstra and the government's announcement that they're going to ban or restrict spectrum for Telstra. But what does this really mean? There's been a lot of the media hype recently, a lot of happening regards notes around Telstra. What does it really mean? Look, the spectrum that they're talking about is regards to its mobile network and broadband wireless network. Now, they won't be bidding on this spectrum for at least another 2 to 3 years, and they probably won't implement it and for another 4 to 5 years after that. So in the short term, what this means for Telstra is nothing really. It would be business as usual for the next couple of years, dividends coming out as per normal. But longer term, what it does mean, it will restrict Telstra's capacity to grow. But this isn't what the government wants. What the government wants is access to the Telstra network. It wants structural separation so that Telstra's clients who are now on copper wires can be moved across to the new fibre to the node network, the NBN Co company being set up. So this is what the government is trying to negotiate, and I would suspect at some point Telstra will certainly need to negotiate something with NBN Co. Now, it will do this most likely on the best terms it possibly can, but it will lead over the longer term, we're talking a decade or so, to erosion of margin, obviously an erosion of client base, because these guys will be crossed to NBN Co. Now, the question is, can Telstra get good enough compensation from NBN Co to cover this erosion of client base? And that's yet to be seen and yet to be negotiated. Now, my view on Telstra is short term, we could see the stock drop as far as $2.90 or a little bit beyond that. Now, it's a pretty hard drop for Telstra. At these levels, I would be looking to buy some Telstra. The dividend stream is still very strong, and we'll be paying around the 13-14% when you gross up for franking credits at these levels. And certainly, I think the longer term price target of Telstra would probably be the high 3s, low 4s. So there should still be some upside growth in there. Even when you split it up, you should get more than $2.90 a share. At this point right now, I wouldn't be buying shares, and certainly if you are a little bit nervous, you may want to reduce a little bit of exposure in your portfolio. But I think there'll be a chance for Telstra in the next coming weeks to buy at nice cheap prices and hold for the medium term, being 2 to 3 years, looking for a run up in the mid 3s and possibly sell out of your portfolio then. For more information, go to our website at growyourwealth.com.au.